A crypto exchange backed by Fidelity Digital Assets, Charles Schwab, and Citadel Securities has launched in the United States. Joining us to discuss is EDX Markets CEO Jamil Nazarali. Welcome to the show, Jamil.
Hi, delighted to be here. Thanks for having me.
We appreciate you taking the time to be here with us. So let's talk about this. So far the exchange offers Bitcoin, Ether, Litecoin, Bitcoin Cash. Why focus on these tokens? And is there any concern that down the line, any of them are mentioned as securities by the SEC?
Well, we deliberately selected those 4 tokens because we feel very comfortable that they're not securities. And over time, as there's more regulatory clarity on what's considered a security and what's not, we would like to expand the list of tokens that we offer.
So, this might seem silly, but I noticed one thing that wasn't there was Doge, and it's not as silly as that sounds, in the sense that, of course, Dogecoin is known as a meme coin, but it's also decentralized, and it is very popular with retail. But I guess I kind of was surprised not by Doge's absence, but by the inclusion, let's say, of Bitcoin Cash and the inclusion of Litecoin at this early stage. Is there an institutional interest in those versus some of these meme coins, which, though it has a large retail following, it provides a lot of volatility and it's decentralized enough that I don't suspect the SEC will come down hard on calling Doge a security.
Yeah, I mean, we hope that we get some clarity and we're able to offer more coins, particularly, some of the ones that have greater retail interest. The reason we selected those 4, obviously, Bitcoin and Ether are the 2 largest coins. Litecoin, Bitcoin Cash, you're right, they don't have as much interest, but because they're Bitcoin derivatives, we felt pretty comfortable that they are not securities, and so that's why we had them. There's some interest, not a ton, but it was important to go in there with as many as we could that were also we felt firmly were not securities.
Jamil, crypto industry leaders recently have said the U.S. is not a place for innovation. Some have said they're looking at setting up offshore. Why the U.S. and why now?
All of our backers make investments for the long term, and all of them have been through many market cycles, so they understand that there are ups and downs in every market. I think all of them believe that cryptocurrencies are here to stay, and that it's important to build a marketplace that we feel is transparent, more efficient, and gives investors an alternative to trade through trusted intermediaries, and that's what we're doing. So
explain a little bit about how this works. But interestingly, this doesn't involve a custodian. This is all self-custody, and exchanges. It's an exchange through that method where the institutions, these are institutions. First of all, how are you defining the institutions? Who's invited to trade and join? How many customers so far are there?
And I saw on your list you didn't have Virtu Financial, which is also a public company and one of our big market makers there. But the way it works is we do not have direct retail accounts. So the market that we're trying to serve here is those investors who want to trade through their trusted intermediaries. So there's a lot of customers, whether they're Fidelity, Schwab, Robinhood, etc. They want to trade through the firm that they already have a relationship where their other assets are, and we want to serve that market. And we have what looks much more like a traditional exchange model where we match the best prices in the market, where market makers and others compete to offer the best prices. And what we're doing is we're just making sure the customers get the best price. We're not taking possession of those customer funds.
How many customers? When we talk about customers, your customers are institutions.
That's
so
right.
How many and are involved, and what's the cutoff? Like, in other words, what kind of what's the criteria for being a customer?
Yeah,
on EDX?
We don't have hard cutoff in terms of your revenues have to be this or your customer base has to be this. We have a number of criteria that we go through. We want to make sure that the firm is reputable. We want to make sure that it's fairly trustworthy. We want to make sure that it's financially stable. And so we have kind of a due diligence checklist that we go through to onboard customers. As you can see from our investor list, we have some of the largest traditional finance firms on there. And there's a number of other investors. I mentioned Virtu, but there's a number of other market makers, including GSR, and GTS, and Hudson Driven Trading, et cetera.
But in terms of size, are we talking about 10, 100, 1,000?
No, more than 10, fewer than 100.
Got it. All right. In the tens.
Yes, in the tens. That's right. And keep in mind, we just launched.
You just launched, yeah.
Yes.
But just kind of sense it's an exclusive club.
It's a limited club.
For now, maybe.
For now,
at the top of the show, we spoke about price action and the institutional interest that could be driving this price action. We have those Bitcoin ETF applications we spoke about. We have this news. Are you surprised to the market's reaction to this institutional interest?
A little bit, actually, because what we're doing is, we announced this 9 months ago, and we launched it. We announced the launch just this week, but this is not new news. It's new news that we launched, but it was going to happen, either this week or next month. So a little bit surprised.
And what do you expect? I know it's a totally different business, but nonetheless, you would probably be involved in some of that liquidity at some point. Do you think an ETF is feasible if it's sponsored by the likes of iShares?
For sure. Yeah. I think that it would provide another vehicle for retail investor, for any investor really, to own Bitcoin. So it's all about providing more alternatives, right? So people can open an account at a Coinbase or cryptocurrency.com and they can buy Bitcoin. Some of them can buy futures. We want to provide an alternative for those that want to trade to a trusted intermediary, and then there may be an ETF, which would be a good thing.
Before we go, I do want to get back a little bit on this whole idea of self-custody, because obviously there was an issue with FTX. FTX for a long time was advertised as sort of like the respected exchange, but obviously we know that they might not have done their accounting and their bookkeeping correctly. I'm being modest here with my criticism.
And you guys did a great job of exposing that, right?
Thank you. Well, thanks, CoinDesk.
Thank you to Ian Allison.
Yeah, Ian Allison. Yeah, and everyone else.
Very impressive.
I just sat and watched it, had coffee like everyone else. But this is. Nonetheless, this is kind of a different model than it might be a model that is more. I guess these institutions are more accustomed to. But do you think that this is sort of a model that will eventually seep into retail? You don't have any retail plans, correct? Do you think that this idea of self-custody will eventually become a retail model?
I think that there are going to be some people that select into this and others I think there's going to be a variety of models. And, we want to serve those customers who want to trade through the existing financial institution. Typically, that's not crypto native, but we want to serve that one. And there will always be people that will have their own wallets, and there will always be people who want to trade through a crypto native firm. So the long answer is, I see a number of different models. Hopefully our model will grow and become successful and become a big part of the market. But I don't see, it replacing all other models out there.
Jamil, thank you very much for joining the show this morning, and congratulations on the launch.
Thanks so much. Have a great day.
That was EDX Markets CEO Jamil Nazarali.